Ghana has made some strong showing in the latest APSA Global Financial Market Index rankings. It went up by 7 places to 6th out of 23 countries in Africa, reviewing in the rankings. Now, Ghana's strongly showing was influenced by 2 pillars, that is the active foreign exchange and the stronger legal framework. The index looked at how developed the financial markets are in these 23 countries and highlights how supportive they are in environment for effective markets. Komla Nyalete is the head of global markets at APSA Bank, Ghana.
On the whole, if you take your, if we go back to 4 years ago, on the whole, countries on the continent are making progress, meaning that they are paying attention to the need to strengthen the financial infrastructure across the continent. Year on year, comparing 2019 to 2020, Ghana did very well, anchored on 2 pillars in particular: access to foreign exchange and legality and enforceability of contracts. And there are some real initiatives that underpin this. In particular, I can speak to the new Corporate Insolvency Act that was passed this year, which clearly makes netting enforceable in Ghana. So Ghana's work, as a result of prior year recommendations, prior year identification of areas in need of work, has paid off in 2020.
Access to FX is one area that we made stronger. Can it be attributed to the Bank of Ghana decision to kind of release, to allow the banks to hold these FX from gold proceeds and all the rest, that has contributed to this?
Absolutely, absolutely. In all markets, really, the first point of call, for corporates, individuals, institutional investors to access, FX, should be the interbank, foreign exchange market. But I know if you look at the structure of our economy, right, where our FX inflows are from specific defined sources, cocoa exports, gold exports, recently oil, export, you will see that a lot of these FX flows does come to the central bank. Therefore, invariably, the participation and the manner and the mode of the participation of the central bank in the market, is important. Therefore, a few years ago, when the central bank does relinquished the requirement for mining entities to continue to sell, their flows, to the central bank, they now move into the interbank market, and the competition in the interbank market, the ability to price discover, has led to a significant growth in turnover, as reported. And again, as you heard from the moderator, hopefully a few years down the road, similar in code liberalization could be extended to other sectors to further deepen and grow the turnover in the market.
One would say that, but who is benefiting from this access to FX? Is it the same foreign investors or those who are holding foreign assets that are benefiting from this? Or they are those who are the local inhabitants of this economy are benefiting from these FX, and that is where the problem is, as in the capital flights and all the rest.
Yeah, no, I can say quite very confidently that this year, the beneficiaries are really, and increasingly the big beneficiaries are local. The beneficiaries are businesses, really, in Ghana.